This is Made for More Living with Johnny Jennings. Online at madeformorerealty.com.
Man, so the real estate market is interesting right now.
Absolutely. It's always interesting, though. It's unpredictable.
Yep.
And that's why you became a realtor, is because of the excitement of real estate here in California.
I love the ever-changing market, the fluidity.
The stress.
The stress. I just eat stress for breakfast. You know what, though, where I am excited about is that people are saying this is the hardest real estate market they've seen in 40 years.
How would you define hard?
Good question. So from a realtor's perspective, hard is the ability to, how easy or how hard is it to make money?
Sure.
And every time a house sells, that's an opportunity to get paid. And there's just been so few transactions. And combine that with the increased number of realtors, there's so many realtors out there. Anyways, the reason why I'm glad about it being hard is I've been doing this now 10 years.
I know what you're going to say.
And people have always told me, all the old timers, like, yeah, well, just wait till you get into a hard market. You don't know what hard is. You don't know what. Well, guess what? My first market is the hardest one in the history of your freaking career. So, like, back off. I don't have to hear that anymore. So there's some silver lining there, but it is challenging.
I think part of you also enjoys the way that it filters out the pretenders, or the ones, playing a realtor.
Oh, the hobbyist.
The hobbyist.
Yeah. Blows my mind. So I tell this people look at me like I'm lying to them. And I'm like, look it up. Go to Inman News. You will see 71% of realtors did not sell a single house in 2024. And they're like, well, and how long of 2024? Like the first quarter, first half? All of 2024. In that 12-month period, 365, 71% of all real estate agents did not sell a single house. 98% of realtors sell fewer than 1.5 homes a month.
So would you say during a hard time that a lot of those folks decide to just give up, move on,
do
something else?
Probably leave California.
Pick another hobby?
Yeah. But here's the thing. If you're doing something not like rarely, like let's say you sell a house every quarter, are you a professional or are you a hobbyist? Like, it's a professional is somebody that wakes up and does it every single day, works the business every single day. A hobbyist is like, I feel like doing it now.
Right.
And those hobbyists cost the clients so much money. They cost people so much money, but people don't understand the difference. They can't identify
it's true.
a hobbyist versus a professional. And so they lump us all together.
Yeah.
But what's interesting about the real estate market is those doggone interest rates. Have you what do you think is going to happen?
Obviously this hard time, as you call it, all started with the interest rates, right? I mean, with inflation and then interest rates going up. Wouldn't you agree? Because fewer people want to purchase a home with such an astronomically high interest rate.
Well, what happened was the COVID. And so to keep everything trucking along, they slammed interest rates down. And that artificially inflated prices, because now you can afford a crazy price on a home, a crazy purchase price with a relatively small payment. And then they're like, inflation got out of control, so they had to start raising interest rates, and now interest rates are at 7%, and the prices haven't really come down.
Right.
And so what's happened is we have these crazy, relatively, people. I love it when people go, oh man, back in my day, interest rates were like 18%. I was so glad when I got it out of the double digits. I got 9.87% interest rate. I was like, great. What'd you pay for your house?
Right.
$50,000.
Yeah.
Okay, great. How much were you making a year? $50,000. I'm like, okay, so that's the equivalent of somebody buying a $500,000 house today.
That math is very interesting, and I'm glad you highlight that, because
it's not
if you really dig
apples.
into the numbers, you're right. It's not apples to apples.
No, and so if let's just say you're making $30,000 a year and you bought a $50,000 house, right? That would be the equivalent of making $300,000 a year and buying a $500,000 house.
Right.
I don't know anybody that's making $300,000 that's only buying a $500,000 house.
Right. Yeah.
And so it's not the same.
You're right. I think that's important that people focus on that. It's interesting.
My guess is prices are going to come down.
But they did a survey, they did a study for potential home buyers and folks that are thinking about putting their home on the market, that they're optimistic. They think that interest rates will come down.
Who's they?
Whoever they surveyed, they probably Zillow. Zillow went out and surveyed people going to their website looking for a home, and they said, or they surveyed people going to madeformorerealty.com. And they said, hey, how optimistic are you that interest rates will come down? Because that, for many people, is preventing them from going and pulling the trigger and moving and selling or purchasing a new home.
Yeah.
And so they're not totally discouraged. They think, okay, well, we're keeping our fingers crossed. We think that interest rates, with the way the economy's going, interest rates have to come down, with President Trump pushing for that.
Interest rates have to come down, or prices have to come down. There's two options here. And what we're seeing right now is prices are starting to come down.
Are they?
Oh, absolutely.
In California?
Absolutely. Yes.
But don't you think more than that has to happen? Don't you think more than just prices have to come down slowly? Don't you think interest rates have to come down as well? I mean, are we going to get housing prices down to a level where people feel like, okay, now it's balanced? The interest rate might not be as low as I want it, but the home prices have definitely dropped. And what kind of impact does that have on the economy as a whole when housing prices go down that dramatically?
I don't think it's going to be one or the other. I don't think you're going to see interest rates drop significantly. And like, interest rates were in the 2s and the 3s when prices shot up to where they are. Are interest rates going back to the 2s or 3s? Absolutely not.
Never.
Absolutely not. That's not happening anytime soon. So it's going to be a combination. Prices are going to come down. Interest rates are going to come down a little, like both is going to happen, and wages need to increase.
You think interest rates get down into the 4s or 5s?
Yeah, you're smiling over there. So I was actually talking with a guy.
I know a lot of people are hoping for that. So
I wouldn't say we're friends, but we're chums. I'd say we're chums. He's a cigar smoker, and I was talking with him. And the reason why I share all this is he's a CEO of a major real estate company.
Okay.
And we were talking. He's like, Johnny, they just need to get down to like 6.5%. If there would just be some relief on the interest rates. This is actually what he said. He said 3 things. 1, interest rates need to come down, even if we just get them down to 6.5%. At the time of this recording, they're in the high 6s. Okay. So just bring them down 0.5%. Second thing that needs to happen is the tariffs need to be resolved. That needs to be figured out, because that will create more confidence and stability in the market. And that
it has an effect on building material, correct?
Well, not only building material, but just overall confidence, like the stocks, like just how the market's doing. Right. It's all based on confidence. Because if people are thinking the market's going to tank, they're just nervous about buying a house.
Right.
Are they going to have a job?
Right.
Right. And so get tariffs figured out. And then the third thing, I thought this was interesting because I haven't heard a lot of people talk about this, is the thing with Iran. Like, that needs to get figured out.
Really?
Yep.
That has an impact on the housing market?
I've been told that it is very, very likely that the U.S. is going to go to war with Iran if they do not figure this out. Very likely. The whole idea of having a nuclear Iran is just really unacceptable.
Right, but you have a similar situation with Russia and Ukraine as well. There's lots of things going on, China and Taiwan, and I think we've talked to on our other show. We've spoken to a lot of experts who say yes, it's inevitable. We are very close to World War III in one way or another.
Very close, and I think the catalyst for that, from again what I've been told, could be Iran. So
that affects the real estate market because, again, it brings on uncertainty for people.
Tons of uncertainty.
Right.
And so if interest rates get figured out, right, tariffs and Iran, then you could have a phenomenal second half of 2025 or a strong 2026. But you mentioned whoever they are, think that the interest rates are going to drop. I prefer to go to a more scientific source, and where I get my information is the poly market. Have you heard of the poly market?
I don't think so.
No? So I only learned about it during the election. So people were so poly market's where you can bet, right?
Yeah.
So where you can bet. And what's crazy is the poly market tends to be eerily accurate.
Right. Yeah, I've heard about that. Yeah.
And so the Fed meets on June 18th. There is
what are they saying?
A 97% chance that interest rates will not change.
Really?
97%. And then July 30th, there is an 88% chance that rates will not change. And then September 17th, but now we're getting out there. By now, all the tariffs and stuff are supposed to be resolved.
Right.
There is a 60% chance that rates will not change.
Still, though.
So if I'm not hanging my hat on, if you are a buyer in today's market, I would not be waiting for interest rates to change. That is not going to be your indicator that now's a good time to buy, because what happens when interest rates do change is now everybody else has been sitting on the fence is going to enter into the market. and it's just going to drive the prices up.
So do you think then from now until September, you continue to see prices dropping from now until September?
We have seen in the last, I would say, 7 to 10 days, an uptick in activity in our business. And that's encouraging because it was cooling. It was really cold. It was like ice cold in May. And that was scaring us because that's typically when things are heating up for the summer market. But we have seen an uptick. So I don't know if people are just getting hey, this is the new normal. We're just going to have to deal with the sevens, like the high interest rates, or if that is an indication of things to come. I'll let you know once it happens, though.
So with all the crazy chaos happening in California, there's a lot of people that want to leave the state, whether it's to Texas or Tennessee or Colorado, Idaho, North Carolina, whatever your reasoning is. Maybe it's just to retire and get a big chunk of property to enjoy your twilight years. There's a reason why so many people have trusted Johnny Jennings and his team at Made for More Realty with selling their home, and you should too. That's why they have over 1,000 five-star Google reviews, why they were voted #1 team in Roseville for the past 3 years. So if you want to find out how Johnny Jennings can help you, maybe even find out how he can get you at least 3 cash offers on your home in as-is condition. That's right, 3 cash offers. Just Google Johnny Jennings with Made for More Realty and get more for your home.